Hello, everyone on TradingView and on YouTube. Happy New Year. It's great to be in 2024 with you studying markets. Over the next few days, I'm going to do several 2024 videos before the launch of my private trading room with my fellow co-mentor. We're going to be teaching everyone one-to-one. So if you want to get that, go underneath this video. So this video is going to cover yens in 2024 because we're started to see just at the end of 2023 a bit of a change in rhetoric, change in direction perhaps in the sort of environment of the Bank of Japan. The Bank of Japan, of course, is essentially what rules the value of the Japanese yen. Of course, you've got counterparties like I've got here. You've got your US dollar against your yen. That would concern the Fed. But largely, the price of the Japanese yen is going to be down to the monetary supply in Japan, effectively, because if it's harder to borrow, people borrow less. Okay, if rates are higher, people may save more. And at the moment, and for a long time, the Japanese central bank rate, okay, the interest rate, essentially how much it will cost to borrow money, has been very low. It's been at minus 0.1%. Okay, it's been in negative. So their negative monetary policy is really what we're going to discuss today, and the end to that. Because as soon as you saw that rhetoric, okay, the price started to fall rapidly. Now, it just so happens that it happened right where I said to get short. And you can see last time, and this is really how it should connect in your brain. This is probably the best lesson you could learn in 2024, or at least one of them. I said to short it up here because when you return to that level, that is a very high price. You've seen people sell it there before, right? So we've seen this happen once, and we're expecting it may be more probable to occur again. We know it might not. We know that could have just kept going up higher. Okay, it could have just found its way above that high and so on. But we know if people have shorted there, you've got some probability that's going to occur again. Now, once you got to that level, what actually happened is you had the Bank of Japan then starting to say what they wanted to say all along, and that's what's pulled the price down. Okay. The price of the dollar against the yen has come down because the yen is gaining strength. Because if rates go up from negative to positive, like they're mentioning, people are going to be more inclined to invest and save their money with in Japanese yens effectively because they'll get paid more interest. All right. At the same time, you've got the rhetoric from the Fed about the US dollar, or basically the interest rate in the US, but set by the FOMC. It's going to really just cause a deviation in the matching, if you like, because the US dollar will have a lower interest rate as it comes down in 2024. That's what they say they're going to do. And the Japanese yen, or basically how much it costs to borrow, is going to change too. So if you've got a growing interest rate in the Japanese yen, falling interest rate set by the Fed at the FOMC meeting, then that really causes a drop in the dollar because people don't want to save if the interest rate's coming down. Okay. And that's why you get this fall, because people then say, you know what, I'd rather invest in the Japanese yen, or at least start to put my money there. But the point and the lesson here is that it didn't happen here for no reason. Okay, you would have had the Bank of Japan say, okay, well, this is enough. This is the highest price we really want. That's why it fell last time, because they thought the same thing. And then they put that news out, they put that rhetoric out about changing in rates. So really, I would expect if that continues, the value of the Japanese yen may reset in that regard. I think you'll probably find, or at least in my opinion, that this moving average, okay, your lowest MA, your 20, provides a bit of support along this key support area as well. You can just about see it. It might be better off on the weekly to draw this. If I just label these levels specifically with an eclipse, that is the support you're falling to, and you have fallen to. Okay. So the support you've already sort of used or started to use exists here, there, there, there. So a contentious level nonetheless. And then higher up, I would expect you'll probably move before you go lower, because essentially if you're going to fall, you'll normally find there's bumps in the road like you had here. And it won't just go in one great line. But into 2024, you would expect that if the stance continues, in other words, you find that the Bank of Japan continues to say they're going to change rates, and then they actually do, obviously this trajectory would continue. But you only really want to short, and if you can get a move up like this, you see, because if you're selling now, you're effectively just selling lows. And if it becomes a case that they change their mind for whatever reason, and you were so sure the price would fall, and it doesn't, it rises again, you'll get screwed. Okay, and you just really don't want that. So you really need a push up before a push down. Now, across the board, generally speaking, on all yen charts, so AUD yen, New Zealand yen, dollar yen, CAD yen, all of them, my bias is the same. I would be expecting a push up here, okay, before a fall down. Now, particularly, like I said, it is the case with the Federal Reserve setting their rates, or at least bringing their rates down, not putting them up anymore in 2024, and the Bank of Japan putting their rates up, that you'll find the economy in Japan, okay, is hiking, and the economy in the US is not, okay, because they don't want to. They've got completely different outlooks. Japan's a large exporter, and raising the value of its counterparties like the dollar, or in other words, decreasing the value of the yen, is positive for exporting economies. Okay, it's more beneficial to have a weaker currency. So you can see that what we've got here is really, really just a reset, if you like, on such a large move, because this negative monetary policy has caused this to happen so much. And now I would expect in 2024, you may see change in direction. So don't forget to get my free training and join my private trading room underneath. Thanks for watching, guys. See you in the next one.